Wow. Okay, today is Monday, March 27th, 2023, and Fiona and I are very, very excited because today is the launch of the California Dream for All down payment assistance program. We've been waiting for it and telling everybody about it, and it's kind of sweeping social media by storm, and everyone's like 20% down, 20% down. So we wanted to kind of break it down and address any sort of misinformation and just kind of give the basics of who qualifies and what is this program and is it too good to be true? Short answer is no, it is not too good to be true, but we'll get to that. So, okay, so I'm Sammy Lyon, I'm a realtor. Fiona Bryan, she's a lender. And yeah, Fiona's the mortgage nerd expert. I love it. So what is the California Dream for All program? What's the program?
California Dream for All program is a down payment assistance program through CalHFA, and it comes in the down payment assistance comes in the form of a shared appreciation loan. So if you purchase a home, 20% of the purchase price will be in down payment assistance, and that's essentially it. You can also put money down of your own. So if you have 10%, the combined loan to value that you can have is 70%, meaning 30% down.
And so who qualifies for?
Who qualifies for this? Okay, so it's all over the state of California. So depending on your county and your county limits, it will be different. In the county of Los Angeles, it is $180,000 a year is going to be the max income limit. I can give you a couple of other. In Riverside County, it's 173. Where else do we do a lot? San Bernardino is going to be 173. So
Orange County.
In Orange County is $235,000. Yeah. So this is a very this is a program for everybody. Well, most people.
So okay, so basically, if you're talking about LA County, if you make less than 180 per year, you can do this.
Yes.
And then any limitations on like credit score or anything else?
Okay, so you have to have a minimum 660. And then from there, depending on your credit score, will impact the amount that we can provide, the debt to income ratio. So how much we can qualify you for on a monthly basis.
Okay, cool. So there's like a minimum and then it gets kind of better as it goes.
Correct. Yep.
Okay, so down payment assistance programs, it's kind of like a catch-all. Is it a grant? Is it a loan? Is it how does it work?
Okay, so the down payment assistance is in the form of a shared appreciation loan. That means that if you sell or refinance, you're going to pay back the loan. There's no interest accruing over the time. It's just you pay back that original loan of 20%, and then you're going to share the appreciation value. So for example, if your property has appreciated $100,000 in the time that you've owned the property and you sell it, 20% of that is going to be shared with CalHFA. That allows them to turn around and make more loans to other people. If your income is below 80% of the area median income, and you can ask me what that means, we can look it up, then your share in appreciation will be 15%.
Okay, so you do have to pay it back, but you're not like paying interest on it. You're not paying a second mortgage on it. You don't have any like extra payment. You just, they sort of like own part of the house.
Think of it as a relative or a friend that you decide to go and purchase a property with. You don't have the cash to do it, but your friend does. And they say, you know what, you can use my money. And all I want from you in return is when you sell it, give me 20% of the appreciated value. So you get to keep 80% of it and I'll take 20.
Yeah, it's like an investment. Like it's like your rich uncle who's an investment savvy.
Exactly.
Yeah. Well, so
rich uncle.
yeah, behind the scenes, like who where's this money coming from? Like, who's funding it?
So this is the state of California, and this comes from some of the bond programs basically the barrier to home ownership is that initial cash investment, and California really would like to have people own their own homes, and this is one way to help you do it.
Right. Yeah, it's sort of solving for like that initial cash. Like if you don't have 20% down, or, you know, obviously we're always myth busting, like you don't need 20% down to buy a home, you can put 3% down, 5% down. But obviously if you put 5% down, your loan
your
is
monthly
higher
payment is higher. You're going to have mortgage insurance. This is designed to kind of like not level the playing field, but it's a leg up for sure.
It closes that gap between someone who might only be able to put 3%, but now they get to put 20%, which lowers your payment, lowers your mortgage insurance, like kind of overall. But in exchange, on the back end, the state, you know, shares in your appreciation.
Yeah. If you're one of those people who is like saving to buy a house and you always feel like it's just out of reach. Every time I think I'm getting somewhere, it's out of reach. This is great because say you have 10% saved up, they're going to allow you to go up to 30% down. The combined loan to value can be 70%, meaning that you can put your 10% down and pay your closing costs. But also, it's going to allow you to lower your monthly payment with that 20% injection of cash.
Yeah. Yeah. So it's down payment assistance. It doesn't like penalize you for having some cash. Like you can use it. It just kind of bumps up your numbers. Because that's one thing we're finding right now is with the interest rates being higher, like even people who do have a down payment, they're qualifying for a much lower priced house. And you know, it's like harder to find something you like in the lower prices. So, okay. So what's like not good? Like why, you know, it sounds like,
the catch?
So great. Like what's the catch? Or I don't know, like what?
I mean, I think if you have 20% of your own to put down, maybe it's not the best. I mean, honestly, the interest rates are so much better than we anticipated them being. They are this morning, they were at 6%. If you are under 80% of the area median income, and 6.375 if you fall in, you know, above that. And so that's kind of what we're seeing in the market right now. Fannie and Freddie, those are the numbers that we're seeing. What's not good about it? I mean, you have to share the appreciation. Some people are like, yeah, that kind of stinks. But if you don't have another option, this is a solution. This is really designed to help, you know?
Yeah. Yeah. Because one of the, you know, reasons to buy property other than living in it, you know, is that over the long term, if you own property, especially in LA County, you're going to have, you know, benefit from the appreciation. So you are sort of like giving some of that away, but it's true. It's sort of like, I mean, I do a lot of like real estate investing, right? And one of the things people talk about is partnering. Like it's better to get, you know, 1% or 10% of a big pie than 100% of a very small pie. And I know it sucks sometimes to be like, I'm like giving away part of my equity in my investment, but if you couldn't even get it, then you have zero. So
exactly.
Why not, you know, but it's a trade-off for sure, like over the long term. But generally people don't like necessarily stay in their homes for 30 years, especially because this is first-time home buyer. Like you'll probably sell and buy a bigger place. And maybe at that point you have enough down where you're not using this program. Because do you have to be a first-time home buyer?
You do have to be a first-time home buyer for this program. And a first-time home buyer is defined as someone who has not owned a property in the last 3 years.
Okay. So you could have owned property 5 years ago, but you don't own anything now.
Yes.
But you can't like use it to then buy a second property. But at that point, you're using the equity of the first one to buy the next one. So
Right.
Okay.
Yeah.
Well, I guess timeline. When can you apply? Like, are there
now
enough funds now? like today?
Right now. Like Like, yeah, so the hype behind the program, like those of us who have been trained in the program, we've had the pre-release information on it for a number of weeks. So we've kind of been behind the scenes pre-approving people for it. There are people who made offers this weekend who are using this loan. And so the time is now. Don't wait, because it will run out. It will run out. There are limited funds. I think they're anticipating approximately 2,300 in the state of California will benefit from this program.
State. Yeah. So
Yeah. So
okay, so it's going to be a run pretty quick. Like,
yes,
if you're thinking about it, I mean, and I always tell people, I'm like, well, there's no cost to like call Fiona and
there's no
run
cost
your
to call.
numbers and like,
yeah, and it's super easy. Like, so our systems and our processes are very streamlined. We have a link for the application. You can get the application started. It literally takes me very little time to do the pre-approval, talk to you about what you qualify for, and get you out shopping. Yeah,
totally. Yeah, and then we'll get you out there looking at places. And it was kind of nice too, is because there's been so much hype about it, and like California Dream for All, CalHFA, like because it's CalHFA, sometimes people think it's FHA, and people don't, like, people get confused.
correct.
Because we've been using down payment assistance programs for years, but because there's so much hype on this one, when we as a buy, you know, when I'm making an offer for you, I'm kind of marketing you to the listing agent and talking about how great you are and how much you love this house and how qualified you are. And you know, now that everyone's kind of hearing about this program, it's not going to be a hard sell. I'll be like, yeah, it's the California Dream for All
thing,
program.
Sammy, this is a conventional loan. Like, I'm a direct lender. We are funding this in-house. So this is a loan like any other loan. It will be seamless for the seller.
Yeah, like it doesn't matter to them. It's not some like, you could still close in 21 days.
I can still close in 21 days. Not every lender out there can, but I can.
That's true. Well, yeah, no,
we may see, I mean,
for...
okay, let's be honest. We may see a little bit of a flurry of activity that slows things down for a week or so. But you know, a 30-day escrow is pretty standard. If we have pre-approved you already and we've already, you know, underwritten on our side, there's no reason why we can't do a 21-day close.
Oh yeah. So can every lender do this loan? Or
no,
you
have to be approved by CalHFA. You have to be a CalHFA lender. So like, if you go to the CalHFA website, you'll see my name is on there. Academy Mortgage is on there. I do these loans. I work with these loans. I mean, they are underwritten a specific way. So there are specific guidelines, and you have to be trained in the program. Right.
Yeah. And you've been doing, because this is just like the latest iteration of CalHFA. So like, we've been doing these, it was just like a different program with like 3% down or whatever, but they basically just made it.
This one in particular is limited to a conventional loan. So CalHFA offers VA, FHA, all of that, like, because we do the loan and they do the second. So, but yes, it's a conventional loan. It's going to be, I'm excited about it. So.
Okay, cool. Yeah. And I think you mentioned it, but I did see, like, yes, because people ask me this all the time, because I also do investment property, but like, yes, you have to live in the property. Like, this is you buying your house, either single family or a condo. You can't use it for duplex or multifamily, right?
No, this is a single family residence. You have to owner occupy, and there are no, we cannot have a co-signer that is not going to live in the property. Mm-hmm.
Yeah. Okay. So like, the answer is yes, you have to live there. You have to like use it for that purpose, but like, you have to also keep the long game in mind. Like, yeah, you might be buying, you know, a single family house or a condo now, but then you'll level up and buy your multifamily investment.
All you got to do is get a foot in the market.
Yeah. Right. Yeah. Okay. That's helpful. I always get that question. So, yeah, I mean, all our contact info is in the description. What's the best way to reach you, Fiona?
Yeah, so
Oh,
I'm at
okay.
fiona.bryan@academymortgage.com. If you go to fionabryan.com, you can actually apply directly. It'll say apply now, and you just click that button and you can just get started. It'll ping me, let me know that you submit an application, and I'll give you a
Cool.
call.
Awesome. Yeah. All right. Well, hopefully that was helpful to kind of get some of the details on all the hype. And, you know, we're always available to answer like specific questions about your specific scenario. And does this work compared to, you know, because it's just one of many programs. And Fiona usually is good at like piecing together and saying, oh, well, this works for you, but that maybe works better. But obviously we wanted to talk about this particular program because I mean, it's pretty exciting because it just came out today and it's like, okay,
Yes.
let's give people 20% down.
What everybody is talking about. Yes, for sure.
Yeah.
Yeah.
Cool.
Great. Thanks,
Well,
Sammy.
thanks.